Good evening, friends. As you know, I am B.L.BEWAL, ex-DGM, State Bank of India. And for the last 14 years, we have been conducting classes for interviews of various positions. As you know that yesterday results have come for the recruitment of credit officers in Punjab National Bank. The written test result has been declared, and now there will be a process of interview. Along with that, there is also some positions in Union Bank of India. The positions are in scale 2. But these positions are also scale credit officers in scale 2, and these are 2 years experience basis, along with the written test and interview process. So friends, we are going to conduct the classes for interviews for both these positions. As you know, this is a gist of notification. Credit officer, we have in Punjab National Bank, we have 1,000 positions, quite a big number. And these positions are in scale 1, GM1, Junior Management 1. The written test has already been held in April of 200 marks. 100 marks of part 1, 100 marks of professional test, efficiency test. Now there will be interview of 50 marks. And you know, 25 marks are minimum 50% marks, that is, minimum 15% marks are required in the interview. Then, Union Bank of India, there are 371 positions. The profile is same, that is credit officers or risk analyst. But this is a position of scale 2, and that is why there is a 2 years minimum experience in any scheduled bank, whether private or public sector. This interview process is slightly different. Along with the written test, there will be interview, but before that, there will be group discussion of 50 marks and 50 marks interview. So friends, both these profiles are same, and that is why we are going to conduct interview for these positions, interview classes for these positions. Now, what is the job profile of credit officer? Friends, you know, credit is one of the principal functions of banking. Giving loans and advances is the principal function of banking. And particularly in credit, there is a risk. As you might have heard about the bear risk in banking business, credit is one of the most important risks in banking business. Apart from that, market risk and operational risks are there. So that is why the credit officer should have the vision, or rather the expertise in sensing the risk in the proposals, future risk in the proposals, and that is This profile requires a different type of knowledge, expertise in analysis of data, in analysis of balance sheet, in analyzing the risk. It may be a risk of these promoters related, their history. It may be a risk related to the segment-wise risk, prudential nonsense. It may be a risk of poor operations or some outside or beyond control situations in the after sanction of loan, beyond control situations which have happened. So friends, a credit officer profile is related to first sourcing of business. First you have to bring the business, which is a bankable business. So how to bring the business? Good proposals. That is one of the part of the job. And we will discuss in detail this aspect in our classes. Then after bringing the proposal, you have to do appraisals. In the appraisals, you have to see what are the risks related to whether we should sanction or not to sanction. It is a decision, credit decision, which we have to take. That whether the proposal is sanctionable, bankable. This type of appraisal is dependent on analysis of financial data, analysis or assessment of working capital, this we will discuss. Analysis of financial data includes the balance sheet analysis. And various ratios we have to see in the balance sheet, like liquidity ratio, solvency ratio, profitability ratio, turnover ratios, debt to equity ratios, leverage ratios, so many ratios which are the tools of financial analysis of balance sheet. Friends, apart from that, how to sanction and what to sanction and how much has to sanction, for that we'll take the classes on the assessment of working capital needs. Friends, the loans or capacities should neither be given in excess or nor less than the requirement, less than the need. So proper assessment, their methods we have to discuss in these classes. Friends, apart from working capital, as you know, working capital is given as a cash credit limit or overdraft limit. But the companies may also come for term loans or project loans. So this class will have the appraisal of project loans, term loans, then how to read the project report, what to read in the project report, what is a technical asset, what is economic viability, what is social issues related to the project, how the management will work. This is about the project appraisal. So project appraisal classes will be held in this. Friends, apart from fund-based limit, like cash credit, overdraft, term loan, a customer may need also the non-fund-based limits, like letter of credit, bank guarantee. As you know, bank guarantees are given by the banks to the contractors against the financial, it may be a financial guarantee, it may be a performance guarantee, and also it may be a deferred payment guarantee in lieu of the term loan. So friends, likewise, there is also letter of credit. Generally it is given to the buyers for routing their purchases through banks by opening the letter of credit. It may be inland LC or it may be a foreign LC. So how the assessment of letter of credit is done, how the assessment of bank guarantee is done, and what are the type of guarantees, what are the type of the letter of credit, whether it is site credit or whether it is a usance credit, we will discuss in these classes. Friends, for your knowledge, people, you may ask what we will do in the classes. So we have made some list of the topics which will be covering the classes, which I have already discussed. Definitely we will discuss about the Punjab National Bank. We are the institution where you are going to give your interview. So about the Punjab National Bank, its loan policy, its loan portfolios, its loan products, and its financials, its performance, we will discuss on the first session. Then about the bank products, bank various loan products, as already I have told, as a credit officer you should know the loan products. Generally the credit loan is divided into retail credit, MSME credit, corporate credit, agricultural credit, and various segment-wise products are there. Different the parameters are there for MSME. It may be a different parameter for corporate credit. So friends, we will discuss some classes or topic-wise on retail credit. Retail credit like home loan, personal loan, car loan, these are part of retail credit. Consumer loan, loan against share, loan against mortgage, gold loan. So these are all retail credit products. MSME is today, as you know in the advertisement also, it is a focus area of banks nowadays. Why? Because MSME is giving a 30% contribution in the GDP and also around 48% contribution in exports. Besides, banks is having focus on MSME lending because first of all it is a medium size or small size tickets credit, so risk is diversified. Second is that in most of the cases, like small industries and micro, you are getting the Sidhi guarantee, and therefore we have a zero risk and a zero capital requirement for these loans under the Basel Committee. So that is why the MSME is the priority. So there are rules, what are the various methods, what are the guidelines for sanction of loans to the MSME, we will discuss in the classes. Corporate credit is definitely a big size loans. It may be through consortium, it may be through syndications, and it may be standalone also, subject to the approval by the board of individual exposures limits, borrower-wise limits. So friends, corporate credit, appraisal, MSME credit appraisal, and retail credit appraisals. These are different parameters for this, and therefore we will have the classes on this. Then, while discussing the various products, definitely we have to discuss about the customers. Customers' identification necessary. So therefore, A retail customer is individual customer. This may be also a customer under the Partnership Act. It may be a partnership. It may be a company. In company, it may be a single person company, private limited company, it may be public limited company. So what are the provisions for opening the accounts? What are the provisions for identifying these customers? What are the KYC norms prescribed for these customers? We will discuss all this. In the type of accounts, constitution of these customers. Friends, I think in corporate credit or credit to the small industries, micro industries, I think the provisions of the Company Acts are very, very necessary. Because Company Acts, some of the sections of the Company Act related to the constitution of the company, incorporation of the company, even the corporate social responsibility of company, even about the balance sheet format of the company. These are some of the special sections which we'll discuss in the Company Act. I think you should know about the Company Act. LLP Limited Liability Partner, this came in 2008. This is also one of the customer, and this is a different type of customer, which is a combination of partnership as well as Company Act. And today, LLP's accounts are coming more in banking. So friends, LLP constitution, how to sanction, what are the provisions of in the LLP Act, we will discuss some classes on this. Then most important part of your interview classes will be balance sheet analysis. How to study the balance sheet? Friends, you must know as a credit officer, because first of all, you must know whether it is denied balance sheet or maybe a cooked balance sheet. Then, after the genuineness of the balance sheet, we should know that what are the financial position of the borrowers in the balance sheet. So, balance sheet analysis requires a special expertise or experience about the looking at the various ratios like liquidity ratio, current ratio, or quick ratio, solvency ratio, in which we will discuss about debt equity ratio or gearing ratio. Leverage ratios, there are some leverage ratio, capital to total assets, capital to your total outside liabilities. There are some leverage ratios, we will discuss on that. In the balance sheet analysis, after seeing the ratios, we have to see the trend in the balance sheet. Trend analysis means that what has been the past trend of the company regard to sales, regard to profit, regard to outstanding of debtors, regard to accumulation of stocks. I think this trend I have to do, that is the trend analysis. The trend analysis may be that it is a new company. And in a new company, we have to compare the data with the same type of company in the market. Maybe that we have already sanctioned the same type of company, but this company is a new company, this project is new. So we have to take the trend analysis from those companies of the same segments. Friends, in banks, all this analysis is done under the CMA data. So CMA data, there is a format given by the bank which has five, 6 parts. First part is operating statement. So this operating statement includes the where profit and loss account, how to file and fill the CMA data, and how to verify those data. These we have to see. These we have to, we will give the examples, we will give the in the classes, in the personal classes or in the online classes. We will discuss this while taking a format of CMA of some bank. Friends, there is second part in CMA is balance sheet, analysis of balance sheet. How to prepare, how to put the various data from the balance sheet in the CMA. Some proper classification of assets, proper classification of liabilities that have to be done in the CMA. After operating part and after having the balance sheet, the third part of this is analysis of working capital. Analysis of working capital depends on projected current assets. If MPBF method is there, we'll discuss on various methods. It may be a turnover method. If the amount is less, turnover is less. If turnover is up to 5 crore, it will be turnover method. Then if this is a big proposal, then we definitely discuss about the MPBF method or operating cycle method. So the various methods of analysis of the working capital assessment in the CMA itself, this is given in CMA. Friends, after discussing these methods, like turnover method, MPBF method, operating cycle method, there is one more, seasonal industries. Seasonal industry does not require regular credit. They take credit only on the busy season, and in the off season they don't take the credit. So friends, how to sanction limits, fix limits for seasonal industries. Then there may be some requirement of export units which are in export. So export credit is slightly different in assessment point of view and the approach point of view. So we'll discuss an export credit. What are the type of credit is given in export? It may be pre-shipment credit, post-shipment credit, it may be foreign LC, it may be buyer's credit, it may be credit credit, seller's credit. Then assessment of non-funded facility, which I have already discussed about the letter of credit and bank guarantees. These classes will be held and we will there have one practical exercise from you that a model proposal will be given and you have to calculate that. Friends, project loan proposals, generally these are prepared by the chartered accountants and project reports comes to you. How to study the project, what to study in the project report. First of all, we have to see the project report, the promoter's track record. There may be some past records, experiences about the promoters. Because I think the proposal in any project, the promoter is most important part. So we will see the promoters. Then the proposal has to be seen from technical feasibility point of view, economic viability point of view. Even we have to see in the economic viability the projected cash flow and DSCR ratios, whether repayment of loan will be easy or how long, how much period it will take. This is calculated as per DSRs. Then the project, there are so many social issues like pollution or green tribunal clearance or like that. A project also contains about the management team. I think big proposals depends the success of proposal depends on the management. So what is the experience of management and what is which team is going to have this proposal. So friends, after the appraisal of the working capital requirement or term loan requirement, then we have to as a credit officer, we have to prepare a proposal. Internally, there are prescribed formats of loan proposal in the banks. And the proposals you have to prepare on the basis of your CMA data. After the proposal preparation, you have to put the terms and conditions of sanction to the sanctioning authority. Then the terms and conditions may be about the how much loan we will sanction, what will be securities, what will the rate of interest, what will the other terms and conditions about the insurance of the stocks, insurance securities, inspection, stock statements, penalty clauses. These will come as in terms of sanction in the proposal. After the sanction, your duty is also to take the documents according to the security. Now these documents may contain, it may be hypothecation of stocks, so hypothecation agreement. It may be a mortgage, equity mortgage, how to create a mortgage in the bank, what documents we have to take. Then it may be the third party guarantee of personal guarantee of director, personal guarantee of partners. So these agreements we have to take, these documents we have to take, and these documents have to be adequately stamped as per the Stamp Act of the state. In case of the companies, a charge is also registered as per section 77 of the Company Act. And that charge has to be registered, how to register, when to register, how much time you have to take, how much time is permitted. We'll discuss on that. Then, after the documents, you have to start disbursements. So disbursement is generally depends according to the progress of the project. Generally, disbursements are done on reimbursement basis. So first, the customer has to spend his own money, and then you have to reimburse that according to the progress of the project. It may be construction, it may be machinery, whatever it may be. So this, after the sanction disbursement, your duty is also the post-sanctions supervision. Friends, this is also a very important part of your profile, that how to see the early signals in any loan account. It depends on your close monitoring. I think your monitoring includes the timely inspection, timely getting the stock statements, even they are looking into the operations of the account, whether the company is routing all the transactions through you or not. This you have to do on day-to-day basis. And this is, here you will definitely have the close monitoring, stick monitoring means you are mitigating the risk of the problem. If you let loose or if you let free the customers, maybe that he may stop routing transactions through your accounts. So friend, follow, this is very important part which definitely avoid or creation or slippage of account to NPA. Even if after close monitoring, beyond control reasons are there, because it is a credit, giving a credit is a risk. It is a business. There may be risk. That there may be beyond control reasons on which the borrower, due to which the borrower is unable to service your interest, service your installments. So that becomes non-performing asset. So how what are it? What are the provisional norms for classification of the NPA as per the Reserve Bank of India's guidelines? What are provisioning norms? We will also discuss on that. Friends, NPA classification is different. NPA recovery is also different. These both are different. You have to classify, no doubt, but it does not mean that in NPA accounts, I think you have more efforts to put in for recovery of these. And so how to recover NPA? This depends on the type of customer, type of facility, type of security, and therefore we have to discuss how to recover these NPA from a company, these NPA from the individuals, if he has a mortgage, the NPAs through various settlement process. It may be a local other process. So these are all acts of recovery, including Service Act, Debt Recovery, DRT Act, and latest IBC Act, which is more stringent tool and tooth for recovery of loans from the companies. So friends, all these recovery process through Service Act, DRT Act and IBC Act will have the classes of this. After this, we'll take your mocks, one-to-one mocks. I think you know about us, how we conduct one-to-one mocks. We have a panel of the experts along with me. If the number are more, then definitely we have rotations. Some mocks will be taken by me and some mocks will be taken by other experts. And definitely in the one-to-one classes, one-to-one interaction, we develop your confidence. We develop the skill how to answer the questions. That is most important part of our interview classes. So please, if you are interested, I think interview, this is an opportunity. First of all, this is a very good position. This is a very good opportunity for the bankers who have appeared for the exams and appearing for the interview. I think this is the opportunity. We should catch it after due preparation and full preparation for the interview. Because interview classes gives you inputs, gives you the inputs about the how to answer the questions, what type of questions you may expect, and what can be the best answers. These also includes some personal questions like HR questions, then your personal profiles like your academics, then your experience, if any. So all these questions which are expected, I think we will take care during the mock, one-to-one mock. So if you are, I think we have given the numbers at the end. If you are interested, we are going to start this batch from tomorrow. The classes will be also online and offline simultaneously. If you are from outside, no worry, you will get online classes simultaneously, and those classes will be recorded and you can see later on also at your leisure time. So thank you very much. Please don't hesitate to call us or put your message about the other terms and conditions of these classes. Thank you. Good night.